WTI crude futures paired gains to trade just above $78 per barrel on Wednesday due to an unexpected increase in U.S. crude stocks. EIA data showed that U.S. crude inventories rose by 3.7 million barrels last week, the most in 6 weeks, and defying market expectations for a 1.5 million barrel draw. U.S. gasoline and distillate stocks also increased more than forecasts. Despite this, oil prices remain strong due to an improving global demand outlook. The EIA raised its global oil demand growth forecast to 1.1 million barrels per day in 2024, from a previous estimate of 900,000 barrels per day, with demand revised higher for Asian countries except Japan. OPEC also maintained its outlook for a solid growth in global oil demand for this year, driven by expectations of increased travel and tourism in the second half. Additionally, lighter-than-expected U.S. inflation data bring forward interest rate cut bets, supporting the outlook for economic growth and energy demand. In the short term, the outlook for oil prices is bullish, driven by robust demand projections and decreasing U.S. inventories. However, the long-term outlook appears more bearish due to an anticipated supply surplus and slower demand growth. Traders should keep an eye on upcoming economic indicators, such as the U.S. Consumer Price Index report and the Federal Reserve's policy announcement, as these could impact market trends. WTI crude oil futures are edging higher on Wednesday after recapturing the $78 resistance earlier in the session. The 50-day moving average is currently dictating the medium-term trend. Surpassing this level will indicate strong buying pressure and could trigger a breakout above the recent short-term peak above $79. In case WTI oil moves above the resistance zone at $79, it will move towards the next resistance zone at $82. Please watch the nat gas forecast in the link below and like and comment to support the channel. See you in the next one.